Hi everyone, welcome to our channel. Today we'll be discussing on a prominent strategy that is being designed by me and my team, and today we'll be exposing everything to everyone so that you will get to know how the strategy works. But before then, if you have not subscribed to our channel, please kindly click on the notification bell so that you will not miss any of our updates. What is all about this strategy? This strategy is a measuring strategy. This strategy actually came as a result of controversial experiences me and my team had during our training sections and also combined with our Forex experience. Now we are going to dive into it to actually give you the details of how this strategy works. First and foremost, there are some things that you need to put in place for you to get this strategy done. Some of the indicators that we'll be using to enhance this strategy are 50% body candle and daily Kubi indicator. The 50% body candle indicator actually help us to mark our financial zone because our financial zone is very important to us when developing this strategy. Financial zone can either be a supply zone or a demand zone. So how do we get our financial zone? We now unlock this indicator, which is the less than 50% body candle, to get our financial zone. Remember, the interface I'm using is on weekly time frame. We use the higher time frame to actually get our financial zone. These are the reactions of the financial zone. As you can see, I'm pointing at them. These are the reactions of the zone that marks the financial zone. Now, to get the financial zone, looking at this previous candle, you can see there is a high spike of a bullish candle, and at the end of the day, it met a zone. It met a zone, a resistance zone that stopped the movement. At this point, this is our supply zone. From the theory says if there is a spike and it's moving upwards and the spike meets a resistance, that particular resistance is our financial zone. But in other way around, if the spike is moving downwards and it meets another support or it meets a support, that zone is called a demand zone. Now, to mark the zone, we pick our rectangular toolbox and we now mark the zone. If you don't know how to mark the zone, just kindly look at what I'm doing. This is how to mark the zone. As you can see, I have marked the zone. Next thing to do is to actually reduce it to lower time frame to see how the candlesticks are reacting within the zone and outside the zone. As you can see, I'm already on 1 hour time frame, and this is how the candlesticks are reacting within the zone. The next thing here is actually to go into the core thing behind the measuring strategy. But before we do it, what then do we measure? What you actually measure is to get the correlation between the breakout and the consolidation. You know, most of the times we talk about market is breaking out and market is actually consolidating. Now we do the comparison between the breakout and the consolidation to actually get the next movement of the market within a given price action. So with the aid of this daily Gubi indicator, it will help us to determine the strength of the market, the area of consolidation, like this place, the area of ranging like this place, and like I said, it also helps us to determine the strength of the trend. Now we have to get the measure thing done. we are to measure consolidation peak range that falls within here and the breakout for us to get the next movement of the market. Remember the consolidation peak range and the breakout. If possible, if there is a ranging, we also get it. But in this case, if you watch from year to year, it's actually consolidation that is happening here. Okay, let me highlight some of the candlesticks that actually forms the consolidation, because it's from there we now get the consolidation peak range. This is one of the candle. I'm marking it from the beginning of the consolidation to the end of the consolidation. This is where the consolidation actually ends. This is where it ends, and this is where it begins. That means for me to get the consolidation, I must consider these candlesticks that falls within this consolidation zone. Okay, to measure the consolidation peak range, you pick the drawing to price range drawing to and measure from the higher highs to the lower lows. Higher highs to the lower lows, this is it. And also you measure the breakout. The breakout using the same, measure the breakout using the same tool. The breakout is actually gotten from the breakout point. There are ranges of candles that forms after the breakout point, but there is a particular candle that participates majorly on the breakout. And that candle, for you to detect that, is always long. Is always long, and it has a volume spike. That is how to get it. That is how to get it. That is to say, you have to also integrate your volume indicator to actually know within the breakout point which of the candle actually forms the breakout, which participate most on the breakout. It's from there you now get the breakout peak range. On how to do that, you measure from the higher high to the lower lows. Now, from this now is now giving us an indication that the amount of consolidation is almost the same thing as the amount of breakout. Looking at the peak range value, we are having 50.3 and the 50.2. With that, the next judgment that we are to take is that because they're having the same amount, the market is gonna reverse because they're having the same amount. Reason being that the breakout has actually completed the amount of consolidation, and from our theory, the amount of consolidation actually gives the amount of extension. But for more extension in the market, maybe more extension for this market to continue moving downwards, the amount of breakout must be bigger than the amount of consolidation. But in this case, both of them are having the same equal value of peak range. That was why the market now reverse. That is how we do our judgmental when doing this measuring. Going by what we said so far concerning the measuring strategy, getting the amount of consolidation and also the amount of breakouts, there is one most important thing that you need to know. Whenever there is a breakout, always look at the end of that breakout to know whether the end of the breakout is it close to a key level. If it's close to a key level, mark those areas because those areas are the areas of confluence. Areas of confluence can be found when there is a pullback. Using your Fibonacci tool, when there is a pullback, you can get the area of confluence there. When there is a trend line, you can also get the area of confluence there. And also in a financial zones is where you can get the area of confluence, combining with your price action, which is very, very important, and your chart analysis. What type of candlestick is forming at that particular key level? Because those are the most important thing that will also help you to know that this market is about to reverse or is about to continue, because your chart analysis or your chart patterns will tell you that the pattern that is forming at a key level is actually a reverse pattern, or the pattern that is forming at a key level is actually a continuous pattern. But the foundation of it is that this measuring strategy will give you a judgmental movement of a particular price direction, and you will now integrate it with your chart analysis and your areas of confluence within the key level for you to do a good trading decision. I will conclude by saying with this little exercise, you can actually make a good trading decision to dictate the next movement of a given price action. Now, I want to point out something before I wrap up this session. Within this zone, or within this zone of calculation, you will notice that because they are having the same amount of consolidation and the same to breakout, there was a reverse to another direction. It's actually telling us at this particular point of our mark out that this period is actually a period of indecision between the two contestants. It's a period of indecision because assuming the amount of breakout is bigger than the amount of consolidation, the market would have extended further, but reverse is now being the case. Thank you for following us to this point. There are more to this, but we don't discuss everything within a YouTube channel. If you want to get a full details of our tutorial on how to catch your trades, there is a link below where you can get details of everything, and also join our class to get a full details on how to win a profitable trading.